And Mr. Microphone, please, and we'll be ready to go.
Access to this webinar is for educational and informational purposes only. Consult a licensed broker or registered investment advisor before placing any trades. For all securities and orders discussed are tracked and monitored in virtual trading accounts. Virtual account prices and returns may differ from actual trading results. Commission costs are excluded. Neither philstockwells.com, CSW, nor its affiliates, nor any of the respective officers. Personnel, representatives, agents, or independent contractors are in such capacities licensed financial advisors, registered investment advisors, or registered broker-dealers. Nothing contained in this webinar, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Trading options involves risk. Visit the OCC website, www.optionsteering.com, to read characteristics and risks of standardized options. CSW provides education and training services that are meant to teach you to the risks and potential rewards of trading options, and we are not a service that tells you what to trade. We are not implying or guaranteeing any profit. As always, do not trade with money that you cannot afford to lose. Past performance does not equal future results, and results discussed in this webinar are not typical and are only valid on a specific or identified date. Your results may vary. By accessing this webinar, you agree to hold the above harmless from any losses you may incur as a result of information discussed in the media identified above. By accessing this webinar, you agree to be placed on our mailing list and receive our newsletter. Rest assured, we take your privacy very seriously, and we will not distribute or sell your information to anyone.
All right, fantastic. So how's everybody doing today? All right, let's see what's going on. Oh, yeah, the market was selling off. That was interesting. We had a little bit of a dip. I think, all right, now here, speaking of news, let's take a look at that. So when there's a dip, the first thing I'm going to do is take a look and see what caused it. So I want to see what happened at about, 11:50 to cause the dip. All right, so usually I go to like Seeking Alpha. I don't have Newsware on this machine actually. I have it on my other machine, but so I can't show you that. But I go to like something like Seeking Alpha, and we'll show you Newsware later. You'll see how it's a lot better than what this is. But I can quickly go down though still and take a look and try to see what happened recently that might have been news. Now I can't assume that Seeking Alpha picked up the news exactly at the right time, but I'm going to take a quick look and say, obviously Dave and Buster going to an all-time high didn't do it. Hyundai's guy resigns, no. Oil producers sink, so all the energy stocks started falling because the oil prices are tanking, and they're getting worse, by the way. Bill Gross, see now here it is, okay? Bill Gross was on Bloomberg. Instead of buying low and selling high, you're buying high and crossing your fingers, Gross said. He thinks this rally is ridiculous, so do I. His fund is still outperforming, so I don't know why anybody complains. It's not outperforming. It's outperforming 22% of his peers. So he's actually in the bottom quarter of his thing. So he's a little bit too bearish, and I'm a little bit too bearish too, frankly. Okay. Home Depot Supply, Sony investor, Sony could see 39% upside. I got to look at that because that's interesting. I like Sony. U.S. Steel not falling apart. That's not what causes us to drop. So it was definitely Bill Gross. There's nothing even around that was similar. What else is going on? CNBC, Facebook moving WhatsApp off the IBM cloud. So this is what I keep telling you guys. This whole cloud thing is bogus because it's just a commodity. You're selling space. And there's not much of a barrier to entry to the people selling space. Early in the game, people like IBM have an advantage because people don't trust a standard company to do a cloud. But it's like network hosting back in the day. It's like you used to only trust a couple of guys like Level 3 or something like that. But then all these small little regional companies came in that would sell it for 1/3 the price of Level 3, and Level 3's business fell apart. Their whole model collapsed. That's what the cloud is. The cloud is in the very early stage where it's profitable, but in a few years it'll just get cheaper and cheaper and cheaper, and nobody's going to be able to make any money on it. It's going to be a low-margin business. And you see signs of that now when IBM can suddenly lose 20% of one of their top 5 customers. Like boom, like Facebook just says, okay, we're moving. I wonder where they went, does it say? It doesn't say. Facebook, other operations Facebook acquired using software services that were brought in-house quickly, not so with WhatsApp. Okay. They're probably moving to the same thing. So, poor IBM is going to lose big clients. Everybody, but all of them are. And they're going to have to drop their prices to get the clients back. What else is going on? Anything exciting? Emirates is buying more jumbo jets. That's pretty normal. Oil we saw. We'll talk about that in a minute. Nope. All right, so nothing else interesting has been happening, really. All right, good. All right, so then we get back to the chart, and we say, well, there's nothing that, okay, so as far as, other than Bill Gross saying that he doesn't trust the market, there's no reason for a major sell-off. So we take a look, and we figure it's probably not going to be that deep, and we're already bouncing off it, so it's not a big deal. But we didn't really go down so much that I'd want to be going long on anything. I guess you can go long on the S&P down here if you really feel like it. Oil is interesting, though. See, I already have a few oil longs. So gasoline 149 and oil is 45.86. I like both of those long. I already have a couple of those, so I have to think about whether or not I want to get more. So let's take a look at those. The coffee is what? Coffee's up a tiny bit. That's all right. Still like coffee down here, 128.15. I'm in at 127.88. I really do like coffee down here, though, with this one. This is KCU7, which is September. So we're going to go through the summer and see how it goes. Now, what did I start to say? Oil. All right, CL. So take a look at oil. And as you can see, I already have two long, and they're at 46.03. So there's not a big benefit to me buying any more right now. If it goes down to 45, then I'll buy a couple more. But at 46, it's, anything around here, that's not interesting enough to double down. All right, but I do like oil down here. I'm building a position. I certainly like it above the 46 line. It's tight stop if you want to play it that way. And then gasoline, same deal. I have two gasolines at 1,494, and we're at 1,490. So obviously, there's no point in doubling down when you're down a little teeny bit. The point of doubling down is, let's say we hit 148, and then if I double down, my average drops to like 148.50. And that's a more reasonable. Then you're in a place where you can probably bounce and get even and come out with a lower stop. There's no point in adding more just because you take a little tiny dip. The futures dips go up and down all the time. Well, not gasoline, which goes down, then it goes up a teeny bit, then it goes way down again. This is not a very encouraging setup, actually. Look at that. Starting here, Terra bad, and then really bad, and we could have another one of those. So you got to be prepared for that. That doesn't look good. But my premise on gasoline is I think that we're going to have a decent demand into the holidays, or at least something, and or at least people will think there'll be something, and it'll punch the price up one more time. But after that, I would not be long on oil until the fall. Holy crap. I don't see it. I mean, look at the disaster they have. And now let's take a look at the EIA report. Hey, Greg, what time are we supposed to start building? Let me ask you, tell me these things. Recording. Yes, I did record. Oh, thanks. Good job, Latch. Can't believe I remembered that. Oh, a North Korea missile launch? Okay. There you go. That's a good one. Not written up in the Seeking Alpha news, but written in general news, I guess, somewhere. North Korea may have launched another ballistic missile. How do you feel about NQU-7? I got caught out on the big jump last week. On the NASDAQ, well, first of all, I wouldn't be playing the NASDAQ with a long-term short because, I mean, the pain of riding these things out is intense. I just play the current month with those futures calls. But yeah, I mean, I do believe in the NASDAQ dropping eventually, but the futures are a very, very, very painful way to play an index when you're wrong. I mean, generally, you just want to be in and the tight stop out if you didn't get it right. Because the idea of just holding the NASDAQ regardless of what it does, I mean, look at what it's been doing. NASDAQ, Okay, so you're talking about U is what is September, right? Is that not September the U? Okay, that's very, very slow. There we go. So U, what? Why do they all say NQU7? Am I crazy? Anyway, I'm believing that it's September. I don't understand why. I don't understand why all these say NQU7. Pretty weird. Anyway, so let's assume we're talking about September. Point being that way too volatile. Scares the crap out of me. So you're giving them until September, which is July, August, so 3 months. So what has this index done in 3 months? So since March, we're up 450 points. That's like $9,000 that can go against you. 450, 4,500. Yeah, $9,000. So you're running a pretty large per contract risk. And yes, I agree. I think it's super tempting, and I like it, and I think it's a perfectly good play. You just need to be aware of what kind of risk you're taking, because 3 months is a long time to be wrong. And if you're not planning on holding it if you're not planning on riding it out to 6,000, what's the point of having a long-term contract? You may as well stick with the short-term ones and just take your profits when they come. Because look, let's say here I shorted the NASDAQ at 5,600, right? And it goes against me, and then it comes back, and I'm all excited, and then starts going against me again, and now we're here. And so you've been sitting there for a month and a half with your short position where you're losing money. Even though maybe you could have gotten out even here, but you didn't, so whatever. Which is, when you have a long contract, you're already getting a long frame of mind. Now, instead, though, if you look at the hourly, and you were shorting, if you shorted here and you had a tight stop and you got out, and then you tried shorting here and you don't make any money and you get out, and then you try shorting here and it doesn't work, and then you try shorting here and it works. And then it comes back and you short here again and it works again. Then it comes back up and you short here again and it works again. And you short here and then it finally works. And then you go up here. And if you short here, it didn't work. But then if you short up here, it works. In other words, the point is that you have, in this 2-week period, you have many, many times when you actually might have made money with a short and tight stop play. And you'll still make the big money on a move down because you're going to hold the contract, right? So the best mentality for that is to just be, to take the shorts, because you won't take those huge losses. You're not realistically going to sit there for a month and let it go from 56.50 to 58.50 and lose $4,000 a contract, right? You don't want that. What you should be doing here is you take $100 loss here, and you take $100 loss here, and you take $100 loss here, and here you make a little bit of money, and here you here you take a loss, let's say, and here you make money, and here probably make money before we take a loss, and here if you manage to get in over here, then you'd be okay. Or right now you'd be trying it again, see if you can make money on a break below. But you have lots of opportunities. The fact that you can make some money, even if it's not a lot, it's better than losing every single time on a long stretch. That's the point. If you want to take something like that, I would do a spread. I wouldn't do a straight short for that kind of contract. It's too painful when you're wrong. But you're saying you got caught on the big jump. So let's see where that would put you last week. So I assume you mean this. So you were short here at 58, then it went up here. See, the thing is, if you are going to stick with the contract, when you get up to like 59, you've got to double down. You've got to have the, if you're not going to stop out here with a loss, the $100 loss here, then you've got to be saying, I've got conviction to double down when it goes to 59. Because you've got to average 58. It's realistic that you'll pull back from 59 to 58, and we did, although we didn't really hit 59. But it's not realistic to expect it to go back to 58. That might never happen. In fact, it didn't happen here. It didn't happen here. Never went back. Okay, normally you get some kind of retrace as the thing moves along. So the days will probably see something like that. But the point is that if even here, if you were wrong at 46 and it goes to 48, what do you need to get even? You need 47, right? Wait, not 46. Sorry, 44. So it goes 44 to 48. You need 46 to get even, and bingo, there it is, and you're out even. Took a long time, but only because you have the conviction to double down do you even have a chance to get out even. If you don't, and you're sitting here hoping it comes back to 46, in a bullish market, you'll never see 46 again. And the same goes for 48, and the same goes for 5, apparently, crazy as that is. And the same is going for 54 now, and 56. None of these things are coming back. Once something's gone, if this market stays bullish, it's not going to come back. And just sitting there crossing your fingers and hoping it comes back isn't the way to go. You're either going to play this thing with conviction or take the loss and try to make it up $100, $200 at a time. But don't expect to make it all back on one big move back in your favor. It's still generally a very bullish market with very little pullback. Hang on a second. All right, where are we? Pre-missile launch, type of LNQ. Okay. Yeah. Wire loaded targets on CBI because hidden debt and revolver. No, it does not make sense. Look, at any given time, especially when a company is refinancing debt, if you take a snapshot, you may see them with too much debt, not enough debt, too much debt, an overextension here or there. Companies juggle their credit, and especially when they're refinancing and making moves. I pointed out earlier, I guess you're not in chat, but we're in CBI at the member chat. And where are it? Here you go. CBI, and that just came up in chat. And we were talking about it. And here's what I pointed out. So the McGuire loaded their price on CBI to $11.50. The reduction was based on the assumption. Whenever you see a reduction on an assumption, that's not good. That he's assuming, he doesn't know for a fact, he assumes the management is drawing down the maximum under its revolver rather than just using the end of the quarter number. And then he's even qualifying his assumption. Companies often clean up their balance sheets at the end of the quarter, blah, blah, blah. Okay. So, and Kramer has been saying bad stuff about Chicago Bridge and Iron. But here's what happened. In the conference call, they addressed all this. And they said the use of cash was impacted by a change. The cash flow for the year will improve. Advanced payments on recent future awards help them make their goal. They're getting an advance payment in April. Despite the quarterly increase, they remain on track to strengthen their balance sheet. They talked about all this stuff in great detail in the conference call. So the person who did the analysis obviously didn't pay any attention to all the conference call. All right, we have completed additional amendment with our lead lending group to ensure that we remain in compliance with our lender covenants as of March 31st and the remainder of the year. We filed a Form 10-Q, blah, blah, blah. All right, they're reaffirming guidance. They expect to earn $3.50 to $4 a share for a $16 share. They're going to earn $4 a share. It's going to be like a P of 4. Okay, if they earn $2 a share, I'm still going to like them. So if they miss their year's earnings by 50%, I'm still going to like them. But they just reaffirmed $4. So this is, it's just sort of like an attack on the company where everybody's like saying bad things about them, and I really don't think it holds water. I really like them down here. But given the falling knife nature of the chart, like that, I'm going to wait until it bottoms again before we start repositioning it. But we're going to certainly add to the trade that we have, and I'm going to probably add it to the options opportunity portfolio as well. How would you create a long and short portfolio from scratch now? Seriously? What percentage would you be long versus short? We never like to be more than 70% long or short. 70-30 is as much as we ever want to be. That's if we're extremely. Right now, we're a teeny bit. We're like 65. We're like 55, 45 short right now. We're a tiny bit short. We make more money on the downside than the upside. There's, in our education section at Phil Stock World, right there, there's 3 articles called Smart Portfolio Management. So if you go to education and you find the archives there, you'll see all these phenomenal articles. And 3 of them are Smart Portfolio Management. I don't know where, but I mean, you have to go back, and then you have to go back in time. There's a tab to go back further for older articles. But somewhere back there are 3 articles on Smart Portfolio Management that talk about setting up each kind of portfolio, a $25,000, $100,000, $1 million portfolio. That's a good way to start for that. And then, of course, we have our watch list for our members. That would be also here. Watch list. Where was that? The watch list is under the virtual portfolio tab. And where's the watch list? There it is. Watch list, 24 stocks to keep our eye on. We wrote this in March, but a lot of the picks were older than March. I'll just give you an idea of what we were picking at the time. To me, like Aflac on 217 when it was here and it's taken off. We like BMY on 35, and it's basically right where it was. It hasn't really gone anywhere, so BMY is still playable. Delta was from 3.5, also, it went up a bit, but not too much. Still a good stock. ESRX has gotten cheaper from 217. We liked it here. It's way down here now. Freeport McMoRan is from 3.5 is about the same place. Freddie Mac, what's that? Your connection to meeting burner. Oh. Uh-oh. Testing 1, 2, 3. You guys hear me? Hello? Oh, I got a weird message saying my connection was lost. All right, thanks. All right, where were we? Oh, yeah, we're listening to the list. So Freddie Mac is still the same price. We like them. GCI is actually, let's scan it, from 5.9. They're about the same price. GE is cheaper. We like them on 3.5 when they were here at 30. Now they're at 27.50. Gilead, also cheaper. That's about, a little bit cheaper. Gilead's a little bit cheaper. H&R Block totally got away. That one took off. That's the problem with the buy list, is things take off. Now, this is interesting. This is Bill Gross's James Company, I don't know why they don't show up. Let's put them in here. JNS. I don't know why that chart's not working. Oh, weird. Did they change their ticker or something? I don't know. All right. So maybe they're good, maybe they're not. Here's LB. LB also, we picked them up. We like them here, and they're basically still stuck in the same place. Macy's got cheaper. PBI, Pitney Bowes, they took off, but they're still not that bad. PSA, 315, they are actually cheaper than they were. Qualcomm, from 3.5, they're up a bit, but they're still a good play. E is that one we just picked over here. So they're up from where we picked them, but not that. Still plenty of room to run. Sun took off, that's gone. So Sun flew up. We don't want to chase that. Super Value from 217 is basically in the same place. We picked them up here, and they're still 4. Accent is Taser, and from 3.5 they're up a nice bit, but they're still a good play here. Target, not too far off from where we started on actually we started on 217, so they're actually lower than where we started. They have their bad earnings here. So I love Target. Target's great down here. Verizon. When did we start then? Oh, I didn't date that one. Well, it was one of the newer ones. No, it wasn't. It wasn't new. I'll assume it was here, so it's probably cheaper. Whole Foods totally took off. That's gone. Can't play that. And Exxon is still cheap. So plenty of stocks on the watch list is still cheap. So that's a great place to start looking for stocks and finding things to buy. What could be the low for oil if it does not pop 50 until July 4th? Oil can go right back to the low 40s very easily. I mean, I don't see it going much. It could pop below 30, It can pop into the 30s, below 40, but that would only be temporary. I mean, 40, I think, is a real serious floor for oil. I just because that's when you start getting to the point where it's just not worth pulling out of the ground. You know, $40 is too many drillers are unprofitable at 40 for that to be sustainable. Oh, look, the indexes are popping back up. Is Exxon a buy here? Yeah, Exxon's on our buy list. We like that, and there's a play on the buy list. Butterfly adjustment for PG. Well, the Butterfly portfolio, we haven't done all the adjustments yet. PG, see, we sold the 8750 calls. They're at 8873, so they're in line. We just have to wait until we get closer to decide what to do. We sold the calls for 320. We sold the puts for 250, so that's 570. So anything within 570 of our targets, we make money. And so here we're right. We're right where we expected to be. We sold the 8750 puts and calls, and I'm sorry. It was not 570. We sold these puts for 135. So it's 455 we sold for. And we sold it, 8750 is our target. We're dead on target. I know it's confusing because so many of our Butterfly plays didn't work out this month, but on the whole, it's good. We're down about $20-something thousand in the Butterfly portfolio this month. We've had a terrible month because a couple of things really took off on us. We just had to adjust out Apple because Apple really blasted through our targets. Who else is really bad? Win is really bad. I posted some adjustments yesterday, though. So make sure you go back to the chat room and check that out. So anyway, so the adjustments for PG, we're going to adjust them next week or, next week. I'll probably put up the rest of the Butterfly adjustments next week. After I finish posting, we already made some changes yesterday, and now we're going to have to do the basic adjustments also for the regular rollover. But the adjustments we just made were positioning adjustments for things that were going badly against us, or just something that was time to move. Do you see any bond jitters? I think the Fed is on such a well-telegraphed path that I don't think there are bond jitters. In fact, we were We got out of them, but we were short TLT puts, the 115s, because I just didn't see TLT. Where is it? And we were short like January TLT puts. I didn't see TLT getting back to 115. So here's 115. I just don't think there's anything the Fed's going to say or do that's going to get TLT back down here, which is more like like raising rates like a half a point. So I think that's all we're going to go this year, the half a point. Everybody knows it's going to happen. It's not going to be a surprise. Next year, we'll probably come back down to the 110 level. But there's no major excitement, no major plays, nothing big going on. So, I don't expect any kind of giant bomb thing. You got to realize, bond traders are professionals, generally. Bond traders are more professional than stock traders. So they generally know what's going to happen. They understand the repercussions of everything happening going on. And, sometimes they'll get caught with their pants down, but not when all the central banks are telling you 6 months in advance before they even consider raising rates. They have a pretty safe job right now. It's going very nicely for them. What are we doing for time? 1:30, okay. I still don't know what time it's supposed to be putting Bill on, but we'll find out. Even though you keep saying how much you like cash, would you still create a long-term portfolio 2 years out? I would always create a long-term portfolio 2 years out because over the long haul, we're still going from 7 billion to 10 billion people in the next 100 years. There's pretty much no stopping it. So here, look at it this way. Okay. So the global GDP right now is, let's say it's $100 trillion. That's 100,000 billion. Is that right? 100,000 billion. Yeah. So now you divide that by the 7 billion people who actually live here, and it's $14,000 a person. All right? So the GDP of the planet is $14,000 a person. If you're going to go from 7 billion people to 10 billion people, you're going to increase the GDP by, 30-something%, or I'm not 30%, 40%. You'll increase the GDP by like 40% to $140 trillion. That is a really large amount of growth. Really, really, really big amount of growth. And that's going to happen over the next 100 years, and it means that there could be brand new trillion-dollar companies popping up tomorrow that have plenty of room to expand and grow if they fill a need for the next 100 years. All right, so the tide is generally towards expansion. Now, you can say global warming, this and that, and whatever. It's fine. Yes, things could happen that may derail the growth. You could always have disease that could derail growth. But the reality is, we in the U.S. and Europe, we're at 40,000 per person. Most countries are moving towards us, not the other way around. So if you have a combination of population growth and more GDP per person, right? Because 14,000 is like Mexico, I think. I don't want to diss any Mexicans here, but I'm pretty sure. GDP per capita by, let's give you an idea, by country. Okay. The GDP of Liechtenstein is $140,000. Well, there's Qatar. This is why nobody likes Qatar. Those bastards have 129,000 GDP per person. Monaco, 115. Luxembourg, 100. You guys don't realize, everybody thinks you're like in the best country, but meanwhile, look at these countries. The average person in this country has, 139,000 GDP. The U.S., you got to go way at 57,000. 57,000 is your lifestyle in the U.S. People in Liechtenstein laugh at you. People in Qatar laugh at you. Monaco laughing at you. Luxembourg laughing at you. Falkland Islands, all three people laughing at you. Macau is doing 96,000 a person. Wow, I got to go to Macau. I didn't realize that. That's incredible. Singapore is doing better than us. Anyway, but the bottom line is, all right, they say that. So what's the global average? You got to go all the way down to Iraq, Costa Rica, Venezuela, okay, Curacao, Algeria. But let's take Venezuela as a good example. Oh, Brazil's worse than Venezuela. Wow, that's interesting. China, look, China's 14,000. Well, that makes sense, though. The global average is whatever China is. That kind of makes sense. I'm sure India's in here somewhere, too. The point being, though, that's the difference in lifestyle. The difference in your lifestyle versus a Chinese person's lifestyle or someone in Brazil or someone in Venezuela. So, unless in the next 100 years you think that the average American and European are going to sink to the level of China or Brazil or Venezuela as far as GDP per capita, unless you think that the top billion people are going to take a big haircut down, then not only will the population growth cause a huge swell in global GDP, but the improvement of lifestyle. And don't forget, China's GDP per capita was like $5,000, not even 20-something years, maybe 20 or 30 years ago, it was $5,000. So China's rocketing up. So when you think about it, we could easily double the global GDP in 100 years. So the bottom line is to go back to answer the question simply, yes, there is always time to create a long-term portfolio because long-term, it's almost inevitable that the markets go up. It's all, unless something destroys the planet Earth over the long haul, you want to be invested in the stock market. Bill's on standby at 1:45. Okay, thank you. All right, good. I will introduce him then. Okay, so we talked about that. Any adjustments to Tesla? We did adjust Tesla. Capture the upside. Oh, no, we're not. Well, I just mentioned that today. We talked about that today. See, isn't it great? I cover everything. Wait, what day was this? This isn't today. I just said that to somebody this morning. So let's get back to that. Control F. Tesla. Okay. So in the chat room today, I said, if you want to cover a short position on Taser, the 2019 350 calls at 72.50, and I'll show you what I mean. And the 450 calls at 38. So let's take a look at Taser. Trade. Taser. So the 2019, whoops. Tesla, not Taser. I'm like, what the hell's wrong with this thing? It's not that, it's my brain. Tesla. That makes more sense. All right. So Tesla's at 350. So if you're short the 330 calls like we are, whatever, in September, we're now into September, I think. You get these 350 calls, which are now like it's not 72 anymore. Obviously, it's like more like 71, but it doesn't matter. So 70, let's say 72.50. It doesn't matter what you say. And the 450 calls are 38. All right. So what is that? 34 is the difference, right? 34 plus 38 is 72. Okay, so let's say about $34 for the spread, or $100 spread. So you've got a $66 upside. So it's about 200% upside on the trade. That's what I'm talking about. Taking that spread, you buy the 350s, you sell the 450s, and that gives you, or if you think right then, it's 34.50, and that gives you 3 times back. So if you're down 15,000 on the short calls, in fact, let's take a look at the short-term portfolio to make a realistic look at it. So in our short-term portfolio, we are down Tesla. Oh, well, we adjusted it recently, so you can't tell. But let's say we're down about $15,000 on the July 335 short call. Oh, that's what we're in, July 335. But it was just September. That was, no, I thought we moved somebody to September. Or maybe we didn't do the adjustments yet. Anyway, the July 335 short calls, we have 6 short calls. I think we're down about 15,000 total on these things. And I said if you're down $15,000, which we are, then the point is what you can do is you can buy $7,500 worth of the spread. So if Tesla keeps going up, we'll make $15,000. I'm sorry, not 15. You make $30,000. No, wait. We got $7,500 worth of spread. If it goes up, we'll make $15,000 more dollars. This spread will turn into $22,000 or whatever on the 350, 450 spread. And then you get back your $15,000 loss. Now, if hopefully it goes up slowly, you'll be able to roll your short calls along until they're up in the 400s. And then you will have basically most of your money back. If it ever dips, you will then the loss on your short calls will immediately be erased. You'll be you'll be no longer down $15,000, and whatever the net on the spread is what you keep. And if you're down a little on the spread, so what? And frankly, even if you get wiped out on the spread, which obviously isn't likely, but even if you get wiped out on the spread, you still get your $15,000 back, and the spread only costs you $72.50, so you get half your money back. So now we take a position with a clear loss, and we turn it into a position that has the potential now to make us $15,000. That's how you fix something like that. So we aren't even at that stage yet. And I actually said, I said personally, I find the current valuation so ridiculous that I wouldn't put a dime into a long, but I also wouldn't make a bet against them that cost me more money than I care about. That's very important. You have to realize that the bet we made in the short-term portfolio, speaking of allocation, was very small. We sold originally like 2 or 3 short Teslas. We planned on doubling down if we had to. But we originally sold like 3 short calls. Now we have 6 short calls, and we're losing money. But all Tesla has to do is just nudge back down, and we're going to make the money that we originally intended. I mean, right now we're showing -18 and -5. If these things go to zero, we're going to have $23,000 put back. We're down like $40-something thousand here from all this crap that we're losing money on Amazon, we're losing money on Netflix, we're losing money on Tesla. It's really hurting us, actually. But, again, this is a $500,000 portfolio that's hedging. So we wanted to have short positions, and we thought if the market suddenly dipped, that Tesla, Netflix, and Amazon would all take a hit, and we'd make some quick money on that. We were totally wrong, and we lost money instead. But certainly not percentage-wise. It's not a big deal. And again, it's a hedge. We're supposed to have a hedge. That's why we have more cash, because we sold all these calls. So we have a lot of cash, but it's offset by a loss in the market value. So we actually have a less value in the portfolio. We have $70,000 less value in the portfolio than we have cash on hand, because we have that cash on hand from selling these puts that didn't go our way. And so to terminate those positions, we have to spend more cash to get out of it now. But again, it's not significant. We can liquidate down to $420,000, and we're still up 320%. So there's no tragedy here to this position. You don't do this kind of trading with money you can't afford to lose. These are risky bets. What do you think of Hertz? Oh no, dead. Come on, Uber's completely destroyed that business. It's never coming back. Look, I would almost say that the way Hertz would save themselves down the road is to get into the self-driving car game. But why would I get it from Hertz? It's We were talking about this the other day. What's going to happen with self-driving cars is, and Uber's not going to win either, because if you're Ford and you make a self-driving car, what are you doing with the self-driving car? It's like you're going to sell it to somebody, like Hertz or whoever, or Uber. You sell it to someone, and then they're going to take that car, and they're going to send it out and pick people up and collect much more money than you sold it for. Why would they do that? Why can't Ford just, the cars, what's going to happen is these cars are going to come off the assembly line and go pick somebody up. A car's going to be finished in Detroit. It's going to go beep beep and look for somebody who needs a ride. And if it wants to head towards New York, it's going to keep finding people who need a ride on the way to New York. And then it's going to patrol the New York area. When it needs to be repaired, it'll drive itself to a Ford repair place and get fixed. Why do they need any middlemen? There's no logic in Ford's business to say, what do they say? We don't want to be in that business. We're going to make the self-driving cars, and any idiot can make an app that can pick, there's like 25 Uber kind of companies. Anybody can make an app that tells a self-driving car to pick up a passenger. So Ford's going to say, we're going to make the self-driving cars, and we're going to collect $2,000 profit maximum on a car, on a $20,000 car, instead of making $50,000-$60,000 by running a self-driving car fleet. That makes no sense to Ford. So that's what's going to happen. These car companies are going to just take over the whole thing. And anybody who doesn't manufacture a car, how are you going to compete with the people who manufacture cars? So that whole thing is going to be disintermediated. Is that right? Disintermediated. Yeah, disintermediated. The whole thing. I mean, nasty, ugly changes of things. A lot of middleman businesses. It's all this AI and stuff is going to start really putting pressure on middleman businesses because, and Amazon is a middleman business, by the way, but the manufacturer, with Amazon, you order something on Amazon. Amazon has to get it from the manufacturer or some intermediate rep or whatever, and everybody's marking up. And meanwhile, why can't the manufacturer participate directly and sell you something right out of the factory? So in other words, if I created, and anybody who wants to give me $1 billion to do this, I'll be happy to set it up. But, just set up an Amazon type website, but instead of actually going to Amazon, all the individual orders go to each individual vendor who sells the actual thing, and they put it in the box and they ship it. Now, they're not going to be as efficient as Amazon because Amazon, that's what they do for a living, and these other guys are generally geared up to sell, to ship out truckloads of stuff. But if that would be part of the business. We would have to create sort of like a mini UPS store inside a factory. So in other words, for our factory partners, we would help them build quick shipping operations so they can do order fulfillment. Now, don't forget, most manufacturers already have order fulfillment for consumers. It's not that big of a leap. But we would help everybody set up order fulfillment centers so that they can take orders directly, cut out all the middlemen, make twice as much money selling their stuff, and everybody's happy except all the middlemen who have to go find real jobs. That's what's happening. The ultimate end of the digital economy is that you won't need all these people in between you and the person who makes something. If you want something, you talk to the guy who made it. And they don't realize it yet. These manufacturers don't understand what's going on because it's like you don't need other people to advertise your product. When I'm looking for a screwdriver on Amazon, I say screwdriver. I don't say a certain brand or this or that. It's up to the brand to put themselves out on the web and get people to look at their brand. But I'm not going to go specifically for a screwdriver. I'm going to go to Amazon, but that's the point. I need to build a conglomerate company that houses all these different manufacturers, that people learn that if they go there, they get much better pricing than they do on Amazon. They deal directly with the manufacturers. They get all the, better. You can do all kinds of things, get better warranties, better returns, all kinds of stuff. That's the way to do it. Because Amazon doesn't do anything that special. I mean, yes, they're very efficient shippers, but they don't own any of that stuff. It's not theirs. That's why they push so hard on things like the Kindle and the phone, whatever that thing is, that tube, Alexa. That's why they push so hard on that stuff. They're trying to come up with their own stuff because they don't make any money on the other stuff. All those things you buy at Amazon make Amazon no money. They make money on cloud services, and they make money selling Kindles. You know, and the Prime memberships, of course. But they don't make money selling you toothpaste. That's got obviously they don't. Because their markup is the same as the supermarket's markup when they sell you toothpaste, except the supermarket doesn't have to go get the toothpaste off the shelf, wrap it up for you, put a label on a box, and ship it to you for free. You can imagine that must blow their profit margin, right? And it does. But fortunately, they came up with the idea of using this cloud service to offset the losses in their main operation. When can we short Bitcoin? You can't say you know, it's Russian roulette. You try to short Bitcoin, it can go to 3,500, it can go to 4,000. Who knows? It's like shorting the NASDAQ. Look, it's like shorting Amazon or Tesla. At least with Tesla, I can get my hand around the valuation. Bitcoin is completely a fantasy world. There's no logical valuation of Bitcoin. And also the thing about Bitcoin, though, all cryptocurrencies are about $100 billion total valuation. Bitcoin's probably half of that, so it's about $50 billion valuation to Bitcoin total. There are tens of trillions of dollars in the world. You know, any reasonable currency that you've heard of probably has $1 trillion in circulation. So 50 billion is nothing. 50 billion is like zlotys or something like that, like Polish money. It's you know, it's a tiny valuation, so you could run that market up and down and sideways anytime you want to. There's no logic to that market. But also, on the other hand, though, if people around the world who have hundreds of trillions of dollars and they decide that they need to have a Bitcoin, oh, you can suddenly shoot Bitcoin up to $1 trillion valuation, which is 10 times where it is now. You do not want to mess around with that stuff. That's, you know, I mean, it's, you know, a little rule change in China while you sleep can cost you, you know, tens of thousands of dollars in losses. Can we just talk about CBI? I was talking about CBI. No, we like CBI. If you go to the chat room, we had a whole conversation about it. I love him. Wait for him to finish going down, but I mean, I absolutely love him down here. RB and CL, we talked about that too. Am I missing my own thing? I like RB. I like CL. Oh, no, don't do that. Damn it. Memory load's connected. That's not good. I said I like RB here. I like CL here at 149. I like RB. N7, is that the current RB? Wait a minute, I'm getting confused. RB. Yeah. RB at 149, I definitely like it bullish. Oil above the 46 line is safer, but anything above the 46 line, I absolutely love it. I have 2 contracts of each of these. Well worth having at this price. What else is exciting here? Nothing else is exciting. So the indexes are bouncing back already because this market doesn't stay down for more than 5 minutes. Coffee we like here. This is KCN7, though. We're not in KC. We're in KCU. It should be right about the 128 line. Coffee I'm big on the 128 line, too. Gold is holding 1750, so all is well there. Natural gas 308, that's NGB7. That's the one we're playing. That's 308. We're playing it from like down here, so we're in good shape. All right, we're about to turn this thing over to Bill, so let me answer a couple more questions. Do you think by 7.4 USO can hold 950? Yeah, 950. That doesn't sound very high. USO. Yeah, that 950. No, it's not going to be low. I can't imagine it's going to be lower than this in July. That's crazy. Are you worried about the dollar in view of the upcoming Thursday events? No, it's not going to. That's not going to trash the dollar. And don't forget, if everything goes okay, it's probably going to rally the dollar, if anything else. Mostly what's going on with the dollar right now is movements in the pound and the euro are moving the dollar. It's not any particular thing that Trump is doing or not doing or whatever. It's like, hey, look, our government is a mess. And that's a given. That's been a given since November, or since before November. You're watching the elections, you would have known that too. I think the range is very clearly from about 97 to 100. And so anything in that range. Right now we're low in the range. It's a good time to play bullish. And if we get high in the range, it's a good time to go bearish. All right, so CBI, are you using STP in oil? Are you using a STP in a stop, I imagine you mean? I got to decode these things. No, I don't have a stop. I'm going to add more because it's July 4th. Because I really think there's going to be a run up into the holiday. How did I get that number? Hang on a second. Hello? Yeah, it is. What's up? No, I rescheduled. It's like third. Okay. All right. Thanks. All right. Are you worried about the U.S. and No, we talked about it. All right. So am I using a stop? No, I'm not using a stop. Because of the July 4th thing, I really think that we have a reason it's going to go up. So I'd rather buy more on the way down than get out. Still, you skipped my request for CBI put. Did I? Again, I think it's too early. I think it looks like a falling knife at the moment, so I wouldn't want to jump in and try to stop it. But I also think it's a good job. And I'm not saying it can't go lower, so I wouldn't go crazy with it right now. Look, it's still going down. It's been going down all day. So at what point do you say that's enough? All right, so there's rumors of things and innuendo and so on and so forth going on. For me personally, for my taste, I'm thrilled to own it here. So if I was dying to do it today, which I'm not, I would wait. But if I was dying to do it today, I would go. Oh, look at these prices! Holy crap! Really? Oh no, that's okay. $15.55. So you can sell the $15 puts for like $4. All right. So you sell it. That's 2019. So you sell a $15 puts for $4. You net in at 11. That's an insanely low price. You collect the money now, and you wait and see what happens. So I would keep an eye on those. Now, if you want to be logical about it, the 20s are $7. So somewhere between 4 and 7 is the best you're probably going to do. And so logically, you say, well, okay, let's say 550 is probably as good as it's going to get. So essentially, I would basically, if I was dying to fill this thing, I would offer to sell them to 5 and see if we open lower tomorrow. If we don't open lower tomorrow, then you can just as easily sell these guys who are already 5-something, 1750. But if we stop going lower, then therefore you can afford to take a risk on a higher put. That's all. But like I said, I would wait on the whole. My default would be to watch and wait and see when it finds the bottom. So where would you add CL? Well, I don't know. I forget where I am now. I have, that's the last one. I'm going to turn this over to Bill, who's going to show us how to find out the news on CBI. That'll be a good idea. All right, so we're going to go trade, active trader. We're going to find oil if I have it. I don't. CL. All right, so I have 2 at $46, basically, $46.03. So for me to add, it would have to be down around 45, and I would add 2 more, and then I'd have 4 at $45.50. That's when I would add. So I would have to be down $2,000 before I even bothered adding, because I just think this is silly. It can get sillier, but if it wants to get that silly, if it wants to go all the way to 45, I'm happy to buy more at 45. But you don't just double down. It's not a random thing. It's like you double down when something. First of all, I have conviction that it's going to come back. I would have the same conviction at 45.50 that it's going to come back. I'm still happy with my 2, even though they're down, because I don't think 45.50 is a big move against me. I have all the way until July 4th to recover. But then by the time it gets to 45, then I say to myself, well, now if I double down at 45, my average is 45.50. That's a big move of the needle. And that means if it goes back to 45.50 on a bounce, I can then get back out to 2, and now I've got too long at 45.50, and I've drastically improved my position. That's what you double down for, to improve your position. You don't double down and just have more and more and more. That's greedy and dangerous. We discussed the EIA report. Oh, no, I won't. Well, we'll see how much time we have after Bill is done. The pressure is going to be on Bill. Now, for me to turn this over to Bill, I have to find him. So I'm going to introduce Bill Olson. And Bill's company is called Newsware. And Newsware is, like I said, it's like having a Bloomberg terminal, except without the graphs. It's all the news that you could possibly want, all the information you could possibly want, right at your fingertips. Incredibly cool stuff. I'm going to put him on as a presenter now, and we'll see what happens. Now, if this gets messed up, I will have to leave and restart. Because when he's presenting, I think I'm just watching like you guys are. All right, so Bill, hopefully you're ready, and we're going to pitch you and turn you into a presenter. Okay, good. What the hell? Oh.
You are now unmuted.
The craziest thing in the world. It's been like this for decades, up and down Wall Street. So years ago, when I realized what a sham the whole thing was, I started looking for a way to invest differently. I realized that if I wanted to beat the markets, I couldn't do it by following what everyone else was doing. I knew I needed to do my own research and create a unique system that gave reliable buy and sell signals. I began studying the movements of stocks across decades of data. And as I did so, I began to discover that stocks don't move at random. What do you mean? Well, a lot of people think of the stock market as a gambling house or a guessing game. But in reality, it's quite predictable. What I found is that stocks actually move in regular life cycles that are completely predictable. Once I discovered these cycles and how to track them, I never looked at investing in the same way. How I made enough money to buy a vacation home in Central America and live life in Laguna Beach here on my own terms. How I won the national competition last year. Investing doesn't have to be difficult. No one seems to realize how easy.
Are we looking? Are we on? Are we looking? Are we on?
I went through some of your personal.
Okay, this is Bill. I'm from Newsware. What we do is we're aggregating hundreds of different news wires, but we do it a little differently. Obviously, we can do it by ticker symbols. We can do it by keywords. We can do it by subjects, category codes. And it really does kind of highlight the news in a different format to give you an opportunity to really trade off of the content. The sources that we're dealing with are the professional grade sources. I mean, I'm dealing with Dow Jones, First Call, SEC filings, you name it, and a lot of these market intelligence wires like Fly and Street Insider. We aggregate them all together, and we put them in a display that actually allows you to kind of see the data in a more clearer light. On my screen right now, I have something that I do that's called Top Picks. It basically tells me all these guys when they put out their brokerage recommendations. I'm watching for the key terms, the conviction buy ratings. I'm looking for the U.S. focus list. I'm looking for the top tier because these are typically the stocks that are going to move as soon as they get these ratings. These are the real buying opportunities. I also just do it where I look at all the ratings real quickly together just to see what's out there. U.S. Steel's upgraded to a buy valuation. Okay. Coke, BMO sees higher upside potential in Dr. Pepper than beverage gains. These sources are good. First Call's really the best. They have the best content. But breaking down the news according to specific segments makes sense. I mean, I got one guy that he's looking for SEC filings just to do, secondaries. When guys are coming out with secondary offerings, he turns around and he just sells the stock as soon as it comes out. Does it work? Yeah, you're adding more shares to the outstanding, so definitely the stock is going to pull back. Happens on a regular basis, and this guy's just sitting, waiting for the alert to come across, and when it does, he executes. The thing about it, we kind of call Newsware more competitive intelligence because we're one of the few guys that have access to First Call, Fly, Jag, and Dow Jones News all in one place. We've been doing this for 20 years and have good relationships on the streets, and we're probably one of the biggest distributors of the news. So I mean, we're not having any issues getting the content. And when you think about it, there's a vast ocean of the news being distributed today, and with Newsware, we're delivering the filtering functions to get the news that is really relevant to you. I mean, we were talking earlier about, Phil was using the term falling knife, and I always remember the guy over at Oppenheimer, the head options guy at Oppenheimer, tell me, Billy, trying to predict the oil market, it's like catching a fallen knife. You're going to get hurt. Let it bottom out. Let it bottom out. And I did. And now it seems more stable. But where there's support and resistance lines, it makes sense. Some things on Newswatch. You were asking about CBI. What's going on with it? I type in the ticker. It's a lot of options. The option stuff's moving here because of that story that came out the other day. Yeah, McGuire. Here it is. They're talking about hidden debt in their balance sheet. And they reduced their price target to $11.50 from $18. That's a big drop on that stock. Hence, you see the bearish flow in the puts and the option tradings. The put volume is very heavy. I got multiple sources talking about the heavy put flow. Yeah, I wouldn't want to be long it. For earnings, stocks always move off of earnings news stories. I had this DVMT, which is releasing earnings tomorrow. I bought it yesterday, sold out of it this morning, but...
You are now muted. You are now unmuted.
Everybody seems pretty, high on it. One of the things that we do is we give you the ability to look deeper into the news source. So for DVMT, I like to look at the option straddles, and I pulled up one source that showed me that there was expecting a 4.5% move expected after the earnings are released. So I don't know. The straddle doesn't tell you which direction it's going to trade. It just tells you that it's expected move. So I wanted to own it. I figured it would have a little bit of a positive run today, and it did. It's up 35 cents. And I bought it yesterday at 67.03. I think it was not a bad trade. Another thing I like to do with the earnings is I like to read last quarter's earnings release. Sometimes that really gives you, some real clear indication as to what's going to be said in this quarter's earnings release. So you have to, you look at it, you just type in the ticker symbol.
What do you think about the stock market right now? Well, it's no secret we're in a bull market. The market's been strong for many years, so there aren't a lot of great values out there. But there are some big opportunities.
Here is a release on Splunk on 525, but But notice when they came out with their earnings release back in February, they really did a miss. The They did an adjusted EPS of 25 cents, consensus 17 on fourth quarter revenue of 305 million versus consensus of 288, but they pummeled the stock. Yet everybody was, really defending the stock, and I just didn't think they were gonna, make earnings when they came out on the 25th, and sure enough, they missed. But reading those last quarter press releases and having the ability to access them, it's kind of nice. It's quick. It's accessible. It's fast. It's a good breadcrumb to kind of look for. Rumor news. It's always out there. There's your chatter. North Korea launches another ballistic missile attack impacting the markets. 3M shares up on Metropolitan Council. Okay, that was nothing. FDA, this is one I just created. I'm just looking for things where I'm searching for keywords like phase 3, PDUFA dates, and keywords. And every once in a while you see opportunities in something where you're looking for keywords that are within your alerts. I have a press wire list. I like going through the press wires. Every morning, I get in at 6:30 and I just start going through the press wires. There's value in reading them. Every day something exciting comes. There's a nugget in there, and you see a stock's move off of a press release that comes out. And Newswire has access to, the 5 major press release wires, plus others, that are just delivering the actual corporate releases from the corporations themselves. I know Phil uses Seeking Alpha when he's trying to figure out what's going on with the market as a whole. I use his Dow Jones News Plus. It really does the same thing. It's just going to give you an aggregate total of what's going on in the market. Intelligence officers won't say if Trump was asked about Russia. Okay. This is slide in energy caps gains in the U.S. stocks. Yeah, that's true.
And Oxford Club CEO and Executive Director Julia Guss was blown away.
And of course, that Sessions off to resign that came out yesterday.
I was very impressed with
I saw that.
Biggest investment contest.
But
Portfolio beat out some of the best-known masters like
let's see what else.
He's one of the country's great thinkers.
If you, with this application, if you're looking to, if you're looking to follow just a portfolio, that's easy. If you're looking to follow news just on events, events really are categorized in metadata, which is some data tags at the bottom of a news story. I index all of them together and create a master list, so you don't have to do one for every vendor. My code works for against all news vendors, and I'm doing everything from, economic tags to, buybacks to, dividends to, earnings, IPOs, mergers, you name it. I have a big, huge list of all of these. I even do it for industry groups, for things like, the retail sector. Maybe you want to follow healthcare, or the healthcare initiative that's out there. I build up keywords to kind of, build an alert so I can really see the news that's going on in an effective manner. As I see it, the best sources out there are the press wires, Dow Jones, Fly, Street Insider. These guys really do come up and add value. There's a million news sources out there, and with Twitter, everybody and their brother's a publisher. But there's certain ones that are really focused on the financial markets that deliver value, each and every day. Some of this data that comes out over Fly is really good. I remember, I'm talking to the guy that owns Fly, and he starts saying that there's takeover chatter in a stock that I own. I was like, huh? Well, as soon as that news came out, I was waiting for the pop, and I sold my position. Buy the rumor, sell the fact type of situation. But there's always good content. You just gotta sit there and watch it and think about it. At Newsware, we help you build these alerts. You name what you're looking for, and we put together, the news into categories, into situations that clears up the minutia of all of the content that's out there and focuses the news on things that you can make money off of. We do business with all the big hedge funds, the exchanges, and a lot of active traders as well. They come to us because we're one of the few places that aggregates the news that actually moves the market. We have a huge database of historical news as well. I mean, there's nothing better than being able to read, a press release from the past quarter before earnings coming out. There's real clues in there, or to go back and read and review what was said in a conference call. There's good information that's going to come out when you reread it that's going to be poignant and pertinent from, in this quarter's earnings release. We're aggregating all these sources and we're databasing them, we're storing them. No, we don't put it on the cloud. We have an actual data center with computers. This is an actual application. It's not a website because we're trying to send the data over, and speed is important. And when you're putting the data on the cloud, there's a delay, and I can't have that. I got to be pumping this out as soon as these stories hit the tape. Having the ability to distribute it, having access to the sources is key, but being able to distribute them in real time as they come out, highly important, especially to, when your guys got, $1 million positions on the stock, they can't wait. They need to be able to see this news as it comes out. We built a lot of functionality around the alerts. As you can see, there's these red dots next to the earnings that indicates that there's new news that comes out since I last checked the source.
Nowhere. Their value's good, but they don't have any momentum yet. That part of the chart is yellow because it's time to proceed with caution. As your stocks move up the chart into the green area.
The thing about it, I can also set these alarms off to where they'll give me a little chime to if there's a specific alert. I could have them pop up and really break through any trading application that I might have in the foreground. I could even have the headlines be automatically read out loud to me. But the key really is to have access to the right sources, to have access to the sources that are going to break the news, not the sources that rewrite the stories from Dow Jones. Well, what good is that when, everybody on the street already knew that information 5 minutes ago? It's kind of defeating when you're buying a real-time wire that's just rewriting somebody else's content. So, you stick to the professional wires, and it makes a difference. It really does. I mean, I saw this, or I saw a report the other day that when they were talking about, one of the senators was talking about the tax bill, and the market was down, 70 points, and they talked about how they were getting, a lot of progress done on the tax reform. That type of news moves the market. Sure enough, the market shot up 100 points off of that report from Dow Jones. I have an alert that I use that's, looks for explosions. There's an explosion at a ticker plant, and its ticker symbol is PKG. It's a $95 stock. It dropped $5 in a matter of seconds. You knew it was kind of fake. I mean, it wasn't going to be killing their earnings, so you buy some of the stock at 90 and sit back and wait because, sure enough, the explosion wasn't anything big, and the stock pops right back to 95. And it was a short-term sell-off, and sometimes there's real profitable situations you can get into when the market overreacts to events. Okay, what else can I tell you about Newsware? Listen, you know what? I cover equities, I cover options, I cover Forex. We have, when the economic reports come out, we get them straight from Dow Jones, and they're in the lockup room of the Labor Department, so, the data's coming over timely and accurately. You know, the trusted publishers is everything. You know, we do have some social media feeds as well because you know what? They do have a tendency to move the market. You got to follow Trump on Twitter because he tweets things out that moves the market, and you need to be able to have access to them. You know, I developed a social media feed for one of the exchanges years ago based on based on their specs, and it was pretty good. It was a pretty good feed, but you know, it had a lot of noise in it. But you know, since then we've just tailored it to where we're following specific guys that actually tweet often, and they're relevant to the financial markets, and it's turned out to be a pretty good feed. And because you're dealing with guys that have big followings instead of just everyone out there, which is too much noise.
That's why I'm so comfortable guaranteeing the chance.
You know,
I really do love these Pinnacle charts. I'm guessing there are a lot of calculations that go into where these dots are plotted. There are, yes.
And you know, setting up alert, you know, it's as easy as just clicking out, making a couple clicks on the application.
History. Determine where the stock is right now in its life cycle. That's what makes my system so selective. Out of every 1,000 stocks, I might find 5 at any given time that are worth.
Now I'm seeing all the news on the dividends that are out there. I mean, Devon Energy declares a 6-cent quarterly dividend. The yield's not too great. Rather be in Verizon or somebody that has a much higher dividend yield. It makes more sense. ExxonMobil, stock's cheap, dividend safe. It's got nowhere to go but upwards.
You actually use this life cycle approach to target stocks that are going down as well. As a matter of fact, I have. Back in the early 2000s, a lot of stocks got very expensive during the tech bubble. That's right.
Yeah, every vendor has a little bit of value, I think, like Midnight Trader or MT Newswires for their straddle prices prior to the earnings. And they do some nice sector updates, which are worthwhile. Fly, I like because of the ratings work that they do. Excellent, really excellent. Dow Jones is a great overall wire, and the press wires. SEC filings, hey, that's the real financials. That's what you want to read for. You really want to look through those and read those because there's actual meat in those SEC reports that you're going to find that actually make a difference.
Rather find the next 10 bagger on the upside.
Let's see.
That must be comforting for the viewers to hear. I actually had to get help from my research team when reviewing parts of your track record because a lot of the stocks you bet against back then don't even exist anymore. One
of the nice things I also like that we're doing here is, a lot of news comes out late at night. And, most systems are just going to show you the news from today. And to me, it's kind of an issue because if, the news come out in the afternoon yesterday at, let's say, 7 o'clock, I'd like to see it. What we're doing is we're aggregating the news from today and, the past couple of months, we put all together in one alert. You can see it's a setting that we have on there. But it just makes sense because sometimes, it's just not today's news, it's yesterday's or the days before that, that you really need to look at. This IR wire, this is a news wire we created internally. I had a hedge fund guy, and he was running a lot of money, and he kept saying he was getting burned because there were earnings reports going out from companies and not being put out over the normal press wire service. So he basically said, what can I do about it? So I went out to all the S&P 500 companies and the Russell 1000, and I signed up to get all of their press releases that they put out online and all their investor relation data, and I created this IR wire. And, when Google puts out their earnings, they put it on their website. They don't put it out on a press release wire. So, it's kind of unusual, but my IR wire picks it up each and every month, and there's a value in that. There's a value in being able to, do it yourself. If the press wires aren't going to be able to pick it up, I got it. It's there.
These are new royalty streams that acquire.
Let's see. And here I'm breaking down the news by sector. Here's a sector on the retail where I'm aggregating probably 75 different retail stocks. Staples call volumes up. Yeah, there are some takeover chatter in Staples. I hear Cerebus might be. There's a story, there's a rumor out there. Cerebus might be trying to take them over.
This is exactly when you want to buy. Before the stock becomes a household name.
Whole Foods.
Eric, you put the complete details on this investment in your new report. Beat the street.
So it doesn't matter if you're trading big caps or small caps with us. I mean, we're getting the feeds directly from the sources, and we're covering everything. We have wires that cover everything from U.S. to to Asia to South America, even in London, of course. I mean, there's so much content out there. You just got to have access to the content that in the markets that you trade. And if you're looking for anything specific, you let me know. If we don't have it already, it's not a problem. Put these wires in.
No questions. Love it.
Goldman asked me one time to bring in some Brazilian news feeds. So I brought in 5 different Brazilian news feeds within a week. It wasn't hard to do. It was hard to translate. That was a big issue because I don't speak Portuguese. So that's this is really it. If I'm gonna talk about newsware in a nutshell, it's really just it's a source to be. It's a market intelligence tool. It's a market intelligence tool that's going to be delivering data in a rapid format. And it's going to be focused. It's going to focus the data on the events and the news stories on the stocks that you want to see and in the industries you want to see. It works. It's been around for 20 years, and it's got some of the best content you can subscribe to. Our pricing model is inexpensive. Phil says we're a third of the cost of a Bloomberg. No, we're even lower than that. Or we start off at $70 a month, and you can get access to whatever content you want above that. But the main thing is it works. I think there's a link to our website on Phil's site if you want to get more information. Just click on it, and happy to help out. That's basic my presentation for the day. I mean, if you have any questions, you can always give me a call. I'm always available.
To play in one of the most undervalued sectors on the planet. Investing in this sector today is the equivalent of buying stocks at the lows of 2009, right at the start of the last bull market. The option I'm recommending is take advantage of it, produce a gain of at least 600%. Tallying that all up, if it all goes at your 6, special play could reach an estimated.
All right, Phil, can I train it back to you? Can I bring it back to you now?
Phenomenal. Now, I think our readers would be very interested to get the full details on each of your pinnacle buys right now. And you're willing to rush a copy of this report, Beat the Street with America's Top Trader, to our viewers today? That's right.
You are now muted.
All right. Oh, wait a minute. I'm muted. Oh, I was muted. That's why Bill couldn't hear me. All right. Sorry about that, Bill. Thanks very much. I think, well, wait. Somebody has to tell me. Can anybody see me? Hello. Can you see my screen now? See, I put up my charts again. Ooh, man, oil's getting worse. Working? No. You can hear me, but you can't see that, huh? Shit. All right. Oh, wait. Greg told me this. Hang on. Start sharing. Oh, how about now? All right. Amazing. Good job, Greg. Greg told me that and I forgot it, but he was right. All right, cool. Bill, thank you very much. That was great. I got to tell you, Bill owns the company. He's not a sales guy for the company. It's so great, that system. If you guys are into looking at the news, if you want to get an advantage of getting information, if you want to say, people ask me all the time, they say, what's up with this company? Do you see anything on this company? It tells you, the second something happens, all you got to do is punch in the company symbol, and you will see exactly what's going on with that company. And you'll get it, you'll see it. If you see something move and you want to know why it's moving, you punch it in, you find out why it's moving. And also, as Bill was saying, though, if you just want to have alerts set up and browsers set up, it allows you to do that. And that way, you just sort of surreptitiously find out something's happening. And it's really useful. I mean, I obviously, I'm more into answering questions, so I use it more as a reference tool for myself. But if you were going to sit there, and I could easily see setting up a trading desk where I have a guy whose job is to just watch that stuff and bring me, tell me when something breaks. Running a hedge fund or something like that. If I want to start making these trades and being opportunistic, it's a great way to go. So if you're that kind of trader, if you're into day trading, you like trading off of information, I have never seen a better system. I mean, it's really fantastic. So if you get a chance to try it, just give it a try and see what you think. But it's, and I believe, I don't want to speak to Bill, I believe it's $300 a month for the full boat system, and you can get, portions of it, not everything. But I don't know if he's got any specials or what he's doing there. But definitely give it a try and see what you think. Because, I mean, I'm fairly positive this thing pays for itself very quickly. All right. Let's see what time it is. Oh, we got a while. Okay, good. All right, so we're all good to go. We're back on track. We'll take a quick look at the market. And thanks again, Bill. I really appreciate it because that's a great, great system that I'm very happy with. Let me see. All right, so not big moves or anything like that. Notice the market's quickly recovered. And I didn't see anything particularly was said or done. It's just it went down for not, like I said before, it went down for not a particularly good reason. So now it's coming back for not a particularly good reason. And on the whole, we're still just flatlining into Comey tomorrow. And don't forget, it's not just Comey. We have the ECB decision also. And the dollar is flatlining. I don't know why, because, I know what the ECB is going to do. They're going to keep their rates on hold the same way they've got them now. There's not going to be any changes. So, to me, the whole thing's a bit silly. But we shall see what happens. That's all. So my top trades right now are long on oil, and long on oil, which is 45.84, long on gasoline, 49.63, long on coffee at 128.2 at the moment, and I wouldn't even try to guess what these indexes are going to do, so I'd stay away from those right now. But those are my favorite trades. Then why do I always check Seeking Alpha? Because I want to know what other people know. I don't want to know what I just know. Where are you? All right? I'm not looking to be ahead of everybody. I'm looking to trade things that are well known. First of all, I'm not trading for myself. So to take advantage of something that's a news item like that is really a personal thing. Like I jump in and I get something before anybody else knows about it. That's the antithesis of what my job is. My job is to tell you when news is breaking and to pick trades that everybody can participate in. Those are not really ideal for what we do as a service. So that aspect of it I don't bother with. I'm saying though, but if I'm running a hedge fund, which I will be, but if I'm running a hedge fund, then I might set aside a desk and have somebody who's watching that stuff for the fund trade. But it still wouldn't make it to PFW because by the time somebody tells me, you have to understand, you're talking about minutes. So by the time somebody tells me that they're seeing something, I'm not going to stare at it myself and I don't have time. By the time somebody tells me that they see a news item that's interesting, I look at it, I check it out, it's interesting, and by the time I get around to posting it and writing it up for the people who are reading it, Phil's Stock World, now it's hit the regular news wires anyway, and it's too late. Your advantage is gone. The advantage you have here and things like that can be minutes. You get a minute, a 2-minute advantage. Because really, if I'm a Reuters reporter, this is what the Reuters reporters are reading so that they write their articles. So before an article hits the news wires, before the article appears on the Drudge Report or whatever, first it comes here, then it goes there. And if you want to live in that space where you have information a few minutes before everyone else, but you've also got to be the kind of trader who can react to that kind of stuff. And there are plenty of guys here who are. And I mean, there's a lot of real hotshot traders here, and there's a lot of fund managers on this site. So that's basically the audience we're looking at here, not casual traders who are doing that. If you're waiting for me to tell you what to do, this may not be the thing that you want to get into. The website is really confusing. I've been on it and can't find the pricing. Okay, well, that's feedback Eileen can hopefully give to Bill. But I think because it's one of those things where they customize it, so it depends on what you need and whatever. They're very into like individual stuff. If you sign up, they actually train you on how to use it. So it's like very individual and very intensive. But and I skim it. I mean, the stuff I use, I know he tells me all these things it can do, and I'm like, dude, I do not have time in my day to get into all the things this thing can do. I'm perfectly happy looking up a symbol and looking up a sector and seeing what's going on. That's all I care about. But it does a million other things that are really cool, but I just don't have time. What were we going to talk about? Now I'm all confused. We're going to look at that EIA thing, weren't we? We talked about that, right? That's where we left off. That so long-term investing in global GDP is the way to go. Let's see. 1 p.m. Correct. And we'll blow it up. So we know there's a horrific bills. They had 3.3 million barrels of oil bills, 3.3 million barrels of gasoline, 4.4 million barrels of distillate. That is just horrific. Propane increased by 3.3 million barrels. That's adding insult to injury. So all other oils were up 4 million barrels, basically. It's your overall number here. 217 to 230 to 017 to 031. You're talking about 14.2 million barrels. We only import a net of 4 million barrels a day. So we had a build of 2.5 days worth of imports. And if we weren't exporting 2.5 million barrels a day, which is 16 million barrels a week, if we weren't exporting 16 million barrels a week, or whatever the hell that number is, 17.5 million barrels a week, if we weren't exporting 17 million barrels a week, could you imagine what kind of bill we'd have? That's what a glut is, folks. That's why oil can't get traction, okay? And again, we go back to my main premise on the cars. The cars are more efficient. The trucks are even getting more efficient. If Elon Musk actually rolls out, and other people doing it, Volvo's already got electric trucks. If electric trucks actually become a thing, we're going to be swimming in oil. It's going to be a complete disaster for them. If the trucks stop, because the cars are already barely using oil compared to what they used to use. If the trucks start using half as much oil, or 20% less oil, it doesn't matter how much less it is. Only 1 million extra barrels a day, and all of a sudden you're screwed with how much oil is stacked up in inventory. And our inventories are already pretty much full. You're talking about a complete catastrophe of a glut. Like, there's too much oil on the planet Earth for the amount of oil we're consuming. And there's certainly too much being produced. You can leave it in the ground, but they won't leave it in the ground because they keep trying to sell it. And they keep trying to sell it because their entire economy is based on selling oil. The Gulf countries, the OPEC countries. They have nothing else. If you have nothing else, you keep selling it. Right? Like McDonald's, if they have to sell hamburgers, that's what they have. They have to sell hamburgers. Somehow, when there's a problem, the problem is how do we sell hamburgers? The problem is not no point is it really in front of them. Like, how about if we go do T-shirts? It doesn't work like that. Hamburgers is what they got. That's what they're going to sell you. They'll come up with 100 iterations of hamburgers. They'll figure something out. That's what's going on with the oil people right now. They got to sell oil. Somehow, they got to get you to buy oil. They've got to have oil. And that's why Trump is rolling back those mileage things, because OPEC or whoever it is who's paying him off directly is basically out there, and they're like, no, you've got to stop this thing with the fuel efficiency. This is killing us. The fuel efficiency is destroying the entire energy market. And it doesn't matter if more people go on the road and drive more miles if they're doing it in a car that gets 40 miles a gallon. Because you cannot drive as much as when I was a kid. When I was a kid, I had a Chrysler Cordova. It got 11.5 miles a gallon. And I remember calculating that. So I had a Chrysler Cordova got 11.5 miles per gallon. My Barracuda got 14 miles per gallon. All right, so now our cars, I think probably my cars average at least 30 miles a gallon now. So even if we drove twice as much, we'd still be using the same gas we used in 1973. And we're not, and nobody is. Nobody in America is not driving more than we drove back then. And frankly, if you think about what people do these days, they sit at home a lot more than they used to. They spend a lot more time watching TV and staying local and things like that. People don't drive the way they used to. They don't go on road trips the way they used to as much. So the net driving is the same or less. Yes, there's more people, but let's see how many more people there are. I'm kind of curious, so let me find out. U.S. population by year, or only by year, but maybe we'll take a look. Whoa. Max, thank you. All right, so see, it's such a small difference. In 1970, there were 220 million people. Now there's 320 million people. So there's 50% more people. So there's 50% more driving theoretically. But if the cars are getting 100% better mileage, you can't catch up. And we just passed the amount of production that we had. When we peaked production in the 70s in the U.S., it was like 10 million barrels a day. That's what we're making now in the U.S. It's 10 million barrels a day. We are back to making as much oil as we made when 2/3 as many people got half the mileage. And the only thing that's saving them right now is that there's still half the population still doesn't have the better mileage cars. Because we had the crash in 2008. In 2008, 9, 10, and almost 11, the car industry was in the traffic. So people weren't buying new cars. The mileage requirements, meanwhile, were going up and up and up. So now, all of a sudden, though, in 2012, 13, 14, 15, 16, 17, what's the number? 17 million cars a year. So 12, 13, 14, 15, 16, 17. All right, so 6 years. So 6 years times 16 million cars, let's say. Oh, that's divided. That's smart. This calculator is my lethal enemy. 6 times 16, should know this off the top of my head, 96 million. So half the cars, exactly what I said. See, I know these numbers without doing, I shouldn't even use the calculator, so I was right. Half the cars have been replaced. We have a couple 100 million cars in this country. Half of them have been replaced. Half of them will be replaced over the next 6 years. So the impact that we're feeling now is only the half impact of how much less fuel we're using. And again, there's no change in trucks yet. You start taking away the trucks, and what the hell are they going to use oil for? It's going to be a disaster for oil-producing countries, and we are an oil-producing country. So it'll be very bad for the energy sector in this country too. And you're not net replacing jobs because the oil jobs you lose are not replaced because it's still now the electricity is coming from a solar panel. So for a while, we're going to have these build-outs of solar panels and such. But once it's running, you're killing the infrastructure. In fact, frankly, you're going to eventually kill the gas station infrastructure. When all the cars are electric, think about how many millions and millions of people who work at gas stations are going to be out of business. You won't need gas stations. You might need charging stations, but you don't need a person for a charging station. You just go there and plug your car in. Unless they invent like some kind of ultra-fast, super high-power charging thing that wouldn't be safe for people. That's probably the way they should go. They should invent a charging system that's so powerful and so fast that it has to be done properly. And that way they'll have like a technician who plugs your car in, and then you go, and then you step away for 5 minutes. Like, like a quickie oil change. Like you'll take your car in, and they'll plug it into some kind of safe machine and insulate the car, and it'll zap up the battery in like 5 minutes, and then you like roll out with a fresh charge. Something like that, so that you can charge your electric car on the road. But even then, most people won't need it, right? Because you'll mostly charge at home, and you'll only use that once in a while when you need a quick charge, like the Tesla supercharger station. So the whole thing, the amount of jobs are going to be destroyed. We talked about that this morning in the Post. The amount of jobs that are going to be destroyed in this country over changes like that are just, it's hard to even imagine the disruption that's going to occur in the next decade or two. It's going to be intense. And this is why I read a lot, because you got to be on the right side of these things. You cannot mess around. So we're back to having as much oil now as we had last June. So let's take a look at the chart. And we'll take a look at how oil performed last June. Because we're now back to the same level of glut. Oh, what's this? Okay. So last June, we peaked out at 51.67. That was the top. Was basically the first week of June was the top. And we fell July 4th with no picnic. That's funny. All right. Anyway, July, I got it. That's too funny. July 4th, we held the 50s. So we got up to the 50s in June. We held it through July, and then completely, literally the day after July 4th, collapsed. Or probably into the July 4th weekend, we collapsed to 45-ish, and then 42.50, and all the way down to 40. So there's no sure thing about oil going up. I think we can get back. I think we can claw to 50 at some point this month, and I would get the hell out. And frankly, it's almost time to short. As soon as you see 50, it's pretty much time to short. Somebody asked me. I said 52.50 is the most you're going to see coming into July 4th. And looking at this and looking at that level of surplus we have right now here, I don't even think we're going to hit that. Gasoline, back to where we were last year. But oil is a little bit lower right now. They're in big trouble. There's no catalyst. There's nothing to stop this from happening, to go back to 40. OPEC's already fired their big guns. They've already extended their cut all the way out to the first quarter of next year. Nobody gives a crap. So I'm not sure what they're going to do. They're going to have to still. They're trying. Saudi Arabia is trying to start tension with Qatar because they got to do something. That's really what it is. It's really about figuring out a way to get people to freak out about oil again so they can get the prices up. Because these guys can't afford to have oil go back to 40. You'll see, and there you go. Then you'll see that Arab Spring stuff. You'll see massive civil unrest. You can see all kinds of problems in the OPEC states. They can't do this. They don't have the budget to have oil. That's if your budget is 80% oil, and oil drops 10%, then your budget goes down 10% or 8%. So that would be like the U.S. suddenly having to cut $1.6 trillion from their spending because we just don't have the money. $1.6 trillion of instant austerity. And that's on a 10% drop. That's not a drop back to 43. Okay, you drop down another 10%, 20%. That would be like the U.S. having to cut $3 trillion really fast. It's not far away from going bankrupt when that kind of stuff happens. So this is going to be a big mess. Yeah, so do we still let U.S. oil go? I still think, though, because of the way we've been ramping it up, I still think that there's going to be a push for oil to go higher, but I think it's going to be bullshit. I just want to participate in the bullshit push. I think it'll be bullshit like this is. This is bullshit. This is bullshit. Then we get another bullshit move up. If we fail at 50, get the hell out. If we fail anywhere, we fail. I mean, we'll be lucky to get past 50. If we get to 52.50, I would, with conviction, begin shorting at 52.50. But given the glut we have this week, if this happens again next week, then we have to abandon. Then we're going to have to abandon ship because we just saw a holiday. A holiday just came and went, and there wasn't even a blip in demand. We had a little tiny drawer 2 weeks ago, and that was it. We've sort of passed a critical threshold of negative demand, where we're going to get less people are going to use less and less oil every month. You can't grow the population fast enough to offset the decline in the use of oil. That's all there is to it. It's a disaster trade. We're going to have to find something else to play with soon. It's going to be a dead item. All right, what else is going on? I'm going to wrap it up now, so let's see. Okay, indexes are indexing, doing the same stuff. Oil and gas laying around, not really inspired by my speech, I imagine. Nikkei still at 20,000. That's encouraging in the Nikkei. Dollar still laying. Gold still up. Silver holding 1750 is a bullish sign. KC still said 128.20. Oh, they stopped trading already. So nothing very exciting going on. And now, like I said, this is simple because for me, see, this is a guy. I don't have my hedge fund yet, so I don't have my own guy to do this. This is a guy who aggregates the news from me. That's what they do. They read all this stuff, and they then post it up. But the delay is where you make your money. Right? It's a time between when the news actually appears and when this guy who's the editor at Seeking Alpha puts it on, or the editor at Drudge, or the editor of the Wall Street Journal, for that matter. It's not instant. Everything goes through a process. And if you can be ahead of that process, and if you know that something's happening, now the step 2 is knowing how to put that stuff together. But if you see news and you can think about how it's going to affect the stock, and you can get ahead of the reaction, and Bill was saying, he goes, oh, this thing, he goes, he said he caught something and moved 35 cents today, and he's happy. Yeah, he's happy because the kind of trade he sets up makes him good money for a 35-cent move. Because all you have to do is be that much ahead, and you make your trade, and you see, and you get the move you expect, and you're done. I mean, think about that with an option contract. Think about taking a front month call, or a weekly call, or a monthly call that's like $1.50, and it goes up to $1.75 because you caught the news. That's a big move. That's almost 20%. You start making 20% a day on a regular basis, you are going to be a well-off person. Chipotle in TA site of a drug raid. Undercover officers were able to purchase marijuana at stores from 2 employees. Wow. I would think that should go up. I mean, isn't that the plot of a Cheech and Chong movie? Bail by Stowe? I didn't even know that was happening. Wow. Soon there will be only bail. Snapchat down again, dwindling DAUs, increasing credit pressure, blah, blah, blah. Yep, it's tough business. All right, so nothing very exciting going on in the news. We're in good shape. All right, but yeah, this oil is catastrophic. You can't have a 14 million barrel build in 1 week. Yeah, you can't do that and assume prices are going to go up. Other than manipulation, there's no reason prices are going to go up. It's fundamentally a disaster for them. So take any kind of moves with a grain of salt. Get out quickly. Take your money. Run. And that's it. But I think this is a little bit of an over-dramatic move down. We get back to 47, 48. I mean, look, I got 2 long contracts at 45. We get to 47. I make $2,000. Of course I'm out. I'm going to take that money right off. I'll take that profit right off the table. Here's the gasoline. I got a profit now in gasoline. I think. Yeah, $250. See, that was easy. So $250 here, be up about at least $1,000 or so here, and that's it. I mean, what else do you need? Make $1,000 here, you make $1,000 there. After a while, it adds up to some real money. I mean, I look at $1,000. I'm like, okay, that just paid for one of my hotels on my European trip next month. Yeah, that's all I want to do. I just want to cover. I'm like, oh, okay, I covered this 3 days of my vacation. I covered that 3 days of my vacation. I covered that 3 days of my vacation. Boom, before you know it, I have a free vacation. But you've got to set short, achievable goals and take the money off the table. Then you look for another trade. Like today, when we started the morning, I said I didn't like anything. We were in member chat today. I said I didn't see anything I liked. This happened, and then I said, oh, my God, let's buy oil, let's buy gasoline. We had this unexpected big drop that we figured we'd probably recover from. So now we're recovering very mildly. So it's like $250 here, a little bit here, and that's how we make our money. All right, last questions, and we're going to go. WTIC, wait. Okay. That's why you pay extra for block. Yeah. Do we double down? Do we double down at some level or set up a new bullish trade CBI? Okay. All right. CLNRB, will you hold overnight? Yes, I will. If I don't make $1,000, I'm good. Because if they go down, again, if they go down a lot, I'm happy to double down because I only have 2 contracts. If I lose a couple of $1,000 and I double down, I'm going to be very happy towards July 4th having 4 contracts at a cheap price. Or 8 for that matter, frankly. So, there's almost nothing that it can do that's going to get me to completely get off it. Because, again, it's not about the fundamentals. It's about my expectation of the manipulation. I firmly believe the game is rigged. And so because I firmly believe the game is rigged, and I don't think the riggers have completely lost control yet, I believe that it will still go up towards July 4th. Not for any good reason. Not for any sustainable reason. But I still want to be there when it happens. All right, so last question will be CBI. Do we double down? Okay, so what is our position on CBI? I don't know. It's not in the options opportunity portfolio, is it? You cannot get over 190. It's so annoying. No CBI here. See, I want to put it into here. So, and then the long-term portfolio, that happens a lot, though. If we have a losing trade on one of our PSW portfolios, we put it into the options opportunity portfolio if I still like it, because then we get a really good price, which makes it a good opportunity. CBI. How is this thing doing anyway? Woof. All right. It was better. It's holding steady. A little disappointing, actually, considering how well the market's doing. You'd think it'd be doing better. But we don't have a lot of momentum stocks here. We have mostly value stocks. And value stocks are not really doing that well. All right, CBI. We sold the 2019 25 put. We bought the 2750 calls. Wow, those are terrible. And we sold the 3750 calls. So, yes, we will reposition this. We will not double down on it. That would be silly. We would reposition. So we have the 2750, 3750 bull call spread. And let's see what we would do. So the 2750 calls are now $1.65, according to the last sale anyway. And for $2, not even $2, we can roll them down to the 1750 calls. Well, that seems to make sense, right? So for $2, I'd certainly roll $10. What do I get for another $2? For another $2, we get to the 1250. So here's the question: would I pay another $2 for another 5? And I think yes, I would. I think we'll end up rolling all the way to the 1250. So now the question is: we have the 2750s. We sold the 3750s. I would buy those back, but the question is now: would I cover again? So if we have the 1250s, it's going to cost me how much money? You're going to go from 165 to 565, so it's at least $4. So I'm going to spend $4. And what could I sell? I could sell the 25s for $2, but we're buying these back for those back for 60 or so. So basically we're getting $1.40 off. So instead of spending $4 for the roll, do I want to cover with the 25 at $2? And I would say no. I'd say the answer to that is no. I don't. It's not enough money that I feel like I want to cover it right now. I'd rather take the chance that it's going to go higher. So again, I want to see a bottom form first. I don't want to catch a falling knife. But when it forms a bottom, I want to roll down to the 1250, and I want to wait. When it recovers, I will then sell maybe the 20s. Is the 20s? Not the 20s. Maybe the 2250s, which are now $2, but preferably I think the 25s. And I want to sell the 25s for about $2.50. If I can get $2.50 for the 25s, I'll be happy, because that means I would have spent net $2 on the roll, and now we're in the 1250 25 spread, where before we were in the 2750 3750 spread. Also at that time, I think we said we sold the 17. No, what did we sell? We sold the 25 puts. Yuck. So we sold the 25 puts. If we roll those down, if we roll them down to the 1750 puts, we could do 2x. I think I'll leave them, because frankly I do think we're going to recover to 25. I think this whole sell-off is idiotic. So I don't see any particular reason that I would want to change this. So I think the only move I'd want to make right now is to spend the money to roll the 2750s down to the 1250s. Especially I would offer $4. If it goes for $4, I would certainly take it. $4.50 is the most I would pay. And then I'd want to turn around for $2.50 and sell like the $25 call. That's the adjustment I would make there. So the bottom line is, though, if you look at the trade, we originally spent $270. So we spent $270 to be in the 2750, 3750 spread. Now we're going to spend another $4, so that's going to be $670 to be in the 1250 calls. But CBI is at $15.25. So they're $3 in the money. So even if we end up spending $670 total, we're almost half in the money on the spread. That's not bad. And we have 2 years to get back over our break even, which is now $12.50 plus $6.50 is $19. So our break even goes to $19, and especially because we sold these 25 puts for $5 also. So really, let's say $20 is our break even. That's not terrible, and that's what's great about these kind of spreads, because we can easily recover. And also, I would point out that even if we're assigned these at 15, right? 15 times net 20 here is $30,000. We still have room in our allocation block to double down on this, no problem. So despite the fact that we've lost $13,000, $14,000 on the spread so far, it's very comfortable. We have a $50,000 allocation block. We're only down 20% of our block, or say 25% of our block. So we're only down 25% of our block. We can easily double down. We still like the stock. We can make a very cheap adjustment that's going to put us in the money again. And then if we sell the calls, we're going to get half that money back. It's really, considering how badly this stock has performed since we entered back on 9/22 with CBI. So here, yeah, when it went down, see, when we got it, it was down here at 25. We thought we were getting a great deal. And it was a great deal for a while, but now it's collapsed again. And the same logic applies, though. We're just waiting for it to stop. And notice here, it fell to 25.94 earlier in September. We waited until it looked like it was recovering to get back in. We didn't jump right in trying to guess where it was going to stop. It'll probably stop at 15, but I don't know for sure. But the point is, I expect to see the same thing. I expect to see a little bit of a consolidation. Then people are going to say, oh, wow, this is a good bargain stock, and it'll go back up. And the point for us, though, is that when it goes back up, we then cover and recover a lot of the money that we're spending on the roll. And we end up with the same spread that we originally wanted, but in a much better position, or about the same amount of money. That's all. These things are not hard to fix. So I don't want you to think I'm like nonchalant about these things, but the fact of the matter is I look at a trade like that, like it's what we're going to do now and the next move and the next move, and if I see something where I'm like, oh, that's easy to fix, then I'm going to say don't worry about it. But I don't want to be cavalier. I don't want you to think I'm like, don't care. I do care, but when I look at it and I see where it is, I'm like, oh, that's not a big deal. I know down 14,000 looks terrible when you're looking at the position in portfolio, but on the whole, it's not a big deal. It's an opportunity for us to take a bigger position, or a better position in this case. Not sure I'm ready to double down yet, because I don't know if they're out of the woods, and I don't know what's going on with the company. But next quarter or whatever, I mean, I just want to be in a better position on the same trade. That's all. All right, cool. Thank you, folks, for coming. I appreciate it. I hope you enjoyed the presentation. We'll try to work the bugs out. I hope to bring in some more guests down the road. And we'll do it again next week, all right? Thanks, everybody.